Hello and welcome. This is Business Incorporated coming to you live from our Lagos studio. Thank you for joining us. I'm Chimezie Obi Iwago. On the show today, Nigeria's business confidence up in November at 25.9 points. Kenya private sector activity slow slightly in November. And Zimbabwe may let foreigners own majority stakes in diamond mines. Let's get the show started with the markets. And it looks like a red day today across markets in Africa. At intraday, all the markets we track here were in the red, with South African JSE index leading losses despite the impressive GDP numbers reported yesterday. The index was down 0.75%, NSE index was down 0.10%, Egypt was down 0.64%. Kenya also closed in the red on Tuesday. And the story was the same in the Middle East as all the markets were in the sea of red. Dubai was the major loser, followed by Abu Dhabi. Qatar and Saudi fell 0.12% and 0.22% each. And in Europe, stocks were lower in morning trade as resurgent trade worries worsened investors' fears about global economic growth. For more on the markets, let's bring in Paul Breeze. Hello, Paul. Good afternoon. A beautiful day to you.
Good afternoon.
Now, there was a widespread optimism across markets on Monday. Tuesday saw a big sell-off on Wall Street over worries that the U.S. economy may be slowing down. What's left of optimism among investors and traders?
Well, here in Frankfurt on the trading floor, the mood has definitely soured, especially if you compare it to Monday, where there was widespread optimism. But the worries about possible slowdown in the U.S. economy, the drop of 800 points in the Dow Jones, all that didn't really spell any good news for traders and for markets, not just here in Frankfurt, really across Europe. Of course, also Donald Trump's most recent tweets that he's a tariff guy really have re-sparked worries that the trade spat with China, between the U.S. and China, might not be dissolved that easily. And so these worries are now back on the table, and have businesses trying to move fast. Reuters is reporting that Chinese refineries are looking to buy U.S. crude, for example, which they haven't in a long time, worried that there might be tariffs on it. Now they're trying to get crude oil to China before March 1st, before the new tariffs would kick in case no resolution is found. We see a similar, at least slight uptick in soybeans, which are also, there's a massive amount in the US that was supposed to go to China, but then didn't. And others are taking the opportunity as well. China's music streaming service Tencent is floating the idea of bringing its IPO to the New York Stock Exchange after it had delayed that when trade wasn't at such a good place.
Well, let's look at some corporate news there, but this time in Japan. There were lots of suspense in Tokyo early today over a historic takeover in the pharmaceutical industry. What was going on there between Takeda and the Irish company Shire?
Yeah, there was probably very few shareholder meetings with so much drama and suspense. Why? Rebels. The rebels within the company, within the pharma company, were threatening to block this takeover of Japan's biggest pharma corporation that it was worth or is worth $62 billion. Until the very end, it wasn't clear whether shareholders would overall agree to this takeover. Finally, a landslide win for the CEO. 88% of shareholders decided, yes, this is a good move. We should acquire Shire. And so the deal can move forward. It is historic because it is the largest takeover that Japan's economy has ever seen, with $62 billion. That price tag, of course, was one of the reasons why some of the company's founding family members weren't so keen on the takeover, because it is a pretty high price tag.
Now, Paul, news coming in says Facebook is no longer the best place to work in America. That's the verdict of a new Glassdoor annual report. Is this a judgment report on social media giants?
Well, let's just hope that Facebook doesn't need that report to know that its employees aren't exactly happy with it. It is a slap in the face for many social media companies. Facebook, of course, in particular, has had a very, very bad year. It's kind of surprising that it still makes number 7 on the list. So much worries about data security of its customers and a lack of transparency in the company. And that's also what employees are complaining about. That's one of the factors going into this survey is employee satisfaction. And they're not satisfied with the transparency management is showing. And while Facebook has been happy to say that no major management changes and executives were leaving until the beginning of this year. This year already, we have seen 10 executives leave the company, among them founders of WhatsApp, Instagram, and Oculus Rift. And it's not the only company, the only tech company or a social media company that is suffering this year. Also, if we look at some of the others, Google, for example, still makes number 8 in the US. However, in the UK, it is beat by a water utility company. How embarrassing. Also, if we're going back to the previous years, we saw Airbnb and Twitter, also Amazon on the list. None of these made it to the list this year. And that does reflect the growing dissatisfaction with tech corporations, with US tech corporations, and especially the social media corporations.
Very embarrassing indeed. Paul, thank you very much for your time and enjoy the rest of the day. In Asia, stocks declined after an overnight plunge on Wall Street as investors worried about a potential economic slowdown and the state of US-China trade war. The Shanghai Composite declined 0.61%. The Shenzhen Composite fell 0.48%. The Hang Seng Index also fell by around 1.6%. Elsewhere in Asia, Japan's Nikkei 225 slipped 0.53%. The Topix shared 0.53%. The losses were also seen in South Korea, where the Kospi declined by 0.62%. In Australia, the ASX 200 fell 0.78%.